Welcome to your Essential Business Briefing. I'm Stephen Carroll.
And I'm Kate Moody. This week, an update on some of the big business stories from 2020. Coming up.
It was the year the price of oil fell below zero. But what happened to the glut of crude supplies since?
Will talks on a global digital tax ever produce an agreement or risk provoking a trade war?
And we'll tell you which products were in and out for shoppers during the Covid-19 pandemic. Now, with everything that's happened in 2020, it's not surprising that some business stories got more attention than others. Back in April, something totally unprecedented happened in the oil market. The price of a barrel of West Texas Intermediate oil slumped below zero, meaning producers were paying buyers to take it off their hands. Kate, remind us, what happened?
Well, as lockdowns were imposed around the world, manufacturing, shipping and travel virtually ground to a halt. And that meant no one really needed oil. Oil prices plummeted. The international benchmark Brent crude, which is seen on our chart here in gray, dropped below $20 per barrel for the first time in nearly 2 decades. US WTI futures in blue on our graph briefly dropped into negative territory, meaning that it was more expensive to store oil than it was to buy it. Now, producers led by the OPEC cartel slashed their output in a really unprecedented agreement to try to balance the market awash with unwanted oil. Global giants Shell and BP have cut thousands of jobs in response, as have smaller oil companies. In the United States alone, oil and natural gas companies shed over 100,000 jobs between March and August.
Now, industrial activity has picked up since then. How has that affected oil markets?
Well, oil prices have stabilized, but not quite at those pre-pandemic levels. Brent crude hit a high of about $50 per barrel in December. OPEC and its partners say that they'll slowly begin pumping more oil in January, even though stockpiles remain nearly full around the world and demand for fuel is still relatively weak. Travel restrictions remain in place, and the International Energy Agency says that means that supplies will probably outweigh demand until at least the end of next year.
Will oil demand ever recover from this, or is this going to be part of a wider shift to different kinds of energy?
Well, the pandemic is certainly accelerating our transition away from fossil fuels. Companies are investing more money in renewable energy sources, and a lot of governments are earmarking a portion of their recovery funds for clean energy sources. France, for example, linked some of its rescue funds for French car makers and Air France to a commitment to reduce their carbon emissions. In the short to medium term, oil will probably remain our primary fuel source, but 2020 could prove to be a turning point.
OK, Kate, more from you in a moment. Turning now to another story. Back in January, there was a major diplomatic spat between France and the United States over the French tax on digital giants. France agreed to suspend collection of its 3% levy on digital revenues, which had made waves in Washington. The truce, to allow for talks, was agreed at the World Economic Forum in Davos. Let's listen to what French Finance Minister Bruno Le Maire told a France 24 debate there in January.
We have decided to introduce a fair digital taxation at the national level. It has been paid in 2019. We have just given some time to have an international solution at the OECD on the basis of the excellent work done by the OECD, because I think that we are all of the view that it is far more preferable to have one single international solution for a fair and efficient taxation of digital activities, instead of having many national taxations all over the world, especially in Europe.
So those talks didn't end up yielding the hoped-for agreement. What happened?
Well, just a bit of background first. There are negotiations underway for years now at the Organisation for Economic Cooperation and Development, the OECD, to try to come up with a new way of taxing multinational companies. There is this general agreement that the current system doesn't work, and the OECD was asked to come up with a better one. Essentially, the plan they came up with was broken up into 2 pillars. The first would see certain profits reallocated for tax purposes to places where big digital or consumer-facing companies do a lot of their business, but they might not have a physical presence, which is what the current system is based on. The second pillar would create a global minimum tax for corporations. That's the technical blueprint, but the political negotiations never got as far as the nitty-gritty numbers. What size companies would be affected by this, what percentage of profits would be reallocated, and by what formula. There are political issues here which there was no consensus around. Back in June, the US Treasury Secretary Stephen Mnuchin wrote to 4 EU finance ministers and said those talks were at an impasse. Now, the work did continue, but essentially it's a political decision to get that to a final agreement.
So what's happened to France's digital tax in the meantime?
As Bruno Le Maire said back in January, in the absence of a global agreement, they would go ahead and collect their tax, this 3% levy on big digital companies. That's companies that have a global revenue of over 750 million euros and French revenue of over 25 million euros. They have now issued those tax bills. We know that Facebook and Amazon are two of the companies that have received a bill. We're talking about millions of euro here in taxes. That opens doors, though, to retaliatory tariffs from the United States. That's been threatened in the past and could come to fruition at the start of next year. France is also keeping up pressure on this at an EU level. Paris wants the idea of an EU-wide digital tax to be discussed by March. There wasn't unanimous support the last time France was pushing for this, so it's not clear that there would be now either. It is also a move that's designed to put pressure on the incoming Biden administration in the United States. A finance ministry source here in France saying that the new president will have around 2 months to establish a position on the subject. Their hope would be is that the US comes back to the table at the OECD. The organisation says that with the political will behind it, a new global tax plan could be finalised in 2021.
Well, the pandemic didn't just affect big businesses this year.
The way we all shopped changed too, with more of us buying online. And there were also big shifts in what we were buying, Kate.
There was a rush to stockpile basic necessities as lockdowns were ordered in many countries. I took a few photos in my local supermarket in Paris back in March. That's the pasta aisle there. And although they were quick to restock, stores around the world saw a run on cleaning products, non-perishable food items, and toilet paper. In the United States, toilet tissue sales jumped over 800% in the spring. Now, if we take a look at Google's overview of 2020, the top items for potential shoppers in the United States included 2 video game consoles and toilet paper, face masks, and hand sanitizer. The search trends were similar around the world as people stocked up on household essentials, electronics, and entertainment while spending more time at home.
The virus will still be driving consumer trends in 2021, I imagine.
In fashion in particular, which has really shifted towards more comfortable styles to stay at home in. Athletic and loungewear made up about a third of U.S. apparel sales at the end of 2020, and that market is forecast to continue growing through at least 2023.
Sounds right, yeah.
A side effect of that wardrobe change as well, belt sales slimmed down this year. They dipped by more than 20% in North and Latin America and in Western Europe as well. A similar pattern emerged in cosmetics. Overall sales fell between about 20 and 30% this year, with much weaker demand for lipstick and more for eye makeup, which of course can be seen above a face mask.
All the more crucial in these times. How big was that shift to online shopping then?
Well, e-commerce hit record levels around the world. Internet giants like Amazon and Alibaba reported surging demand, despite some backlash over working conditions and accusations of unfair competition. Here in France, where only about a third of small retailers had an online presence before the pandemic, the government's been giving grants to help those small businesses build and launch their websites. Research by IBM suggests that the pandemic has accelerated the shift away from physical stores by roughly 5 years.
Okay, Kate, thank you very much. Well, 2020 has been an extremely difficult year for many entrepreneurs. The pandemic shut down businesses at short notice, leaving bosses to navigate a host of financial and human resource challenges. We spoke to many small business owners on the show this year, and we've asked some of them to tell us about their hopes for 2021.
2020 was a difficult year, but I think it brought some positive too. It gave us all time to think, time to step back from our day-to-day life. I also had my son, so it gave me time to take care of him and my family. And around me I've seen people thinking, fighting, adapting, innovating. For some, it was impossible to adapt, and help was too slow to come or inaccessible. So for 21, I wish to entrepreneurs who have lost their company, employees who have lost their job, to have the strength required to rebound. I also wish for 21 that we keep only the best that brought 20, and that we'll overcome all our challenges. I also wish to everyone to party hard, because I think we all need it, especially bars, their suppliers and staff.
2020, as for everyone, has been an emotional roller coaster. Very hectic, But as per everything, there are more profits than loss. And yoga-wise, we can tell that yoga is now everywhere because confinement has seen the huge booming of yoga and digital yoga, yoga online, yoga at home. They're huge hashtags on the social media. And as far as Le Tigre is concerned, we're very happy we've been contributing to the expansion of that yoga online business. And please keep practicing, keep taking care of yourself, and keep doing yoga at home. Namaste, Happy New Year.
Well, that's it from us in 2020. Thank you for watching this year. And if you missed a show, they're all available on our website.
And as always, you can find us on social media for your comments and questions. We'll be back in the new year with all the business news you need to know.
Bye for now.